Hello and welcome to the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann's form reading analysis. Tonight I've got a special deep dive on the British pound US dollar, some cool stuff there for you, and some cool stuff scattered around in a couple of the currencies tonight, so there's plenty to talk about. In this episode, we'll be checking out the Aussie dollar US dollar, the pound US dollar, the euro US dollar, and the US dollar yen. If you're new to the channel, welcome. It's great to have you here. There are some videos at the top of the channel that you might like to check out. And if you do find some value in this or any of my videos, I'd really appreciate it if you could just click on the like button, leave a comment, and subscribe. It tells the YouTube algorithm that there is some value in the video, and it will then recommend the video to more people. My main interest in this channel is spreading the word of WD Gann and helping people on their Gann journey, because I believe, as Gann believed, that A, you get a lot of pleasure from helping those who are trying to help themselves, but B, if you help others, you will be helped. In case you missed it, I released the third video this week in my Gann's Gold series. This one is on form reading. It's a little bit longer there at 48 minutes, but I can tell you right now, if you're a trader who's been studying Gann for a while or just studying trading for a while and you're not making consistent profits from the market, it's probably form reading that's your challenge. Now, in this video, I don't give you everything. You'll find Gann's form reading in a lot of his works, especially in how to make profits in commodities, but I do give you, in my opinion, some pretty good stuff there. I walk you through a trade and I show you what I'm thinking at each step, and you'll see, especially if you pay attention, exactly how I set up all of my charts there. Also, in last week's episode of the Forex Form Guide, I did get a couple of questions about this law of vibration cycle. One eagle-eyed viewer pointed out that in the beginning of the chart, the turns are further apart than they are later on in the chart. And that's something that's not uncommon with cycles. Gann said that the law of vibration explains all the different phases of the market. Just think of these as different phases of the market. Sometimes you're getting more pivots each month than other times. But fantastic question there. And if you do want to study Gann's law of vibration, the best place to look for it is in his novel, The Tunnel Through the Air. It's written in code. It's not the easiest book. It's not even close to being the easiest book to decode or decipher. But if you want a way in, well, think about law of vibration and the first letter of each of those words, LOV, which are the first three letters of the word love. Tunnel Through the Air is a love story. There you go. There's a way into it. I've recorded an audiobook of The Tunnel Through the Air. You can find that on the channel as well. And you can listen to the whole thing, or you can listen to each chapter individually. I know a lot of you are still going through and doing the challenge that I issued earlier in the year, which is to listen to one chapter multiple times each week so that it starts to sink in and you start to pick up on the repetition that Gann puts in there. When he's repeating something, he's trying to draw your attention to something important. Before we get going tonight, a quick disclaimer, this video is for educational and informational purposes only. So we'll kick it off with the Australian dollar US dollar tonight. And the more experienced form readers among you will notice a couple of key areas on these charts. Firstly, I have to admit, I've got this wrong on the Australian dollar. I was expecting from the end of August a steep run down. We haven't had that. We've had a steep run up in this market, so it's been a little bit disappointing. However, we really are coming to a key moment in this market, and I think that after a year that's been pretty much sideways, we are starting firstly to see some larger moves in this market, and secondly, I think that we're getting ready for a breakout one way or another. If you look at this monthly chart going back to the February 2021 high, we had a trend line from the low to the next quarterly lower swing top there. We hit the trend line there. We're now approaching that trend line again. We have tried to go through there with our current top. See on the monthly chart there, we opened, we ran up. As I said, it's been a strong run up there. But currently, we're sitting in the middle of the month. 21st, 22nd of September will be tomorrow's market open. We've got about 8 days left in the month. And while we've pushed above that trend line, we're currently trading below that. Now here, we do actually have an overbalance in price on the Australian dollar. So at the very least, I think there's more downside here. I don't think it's just going to stop and then turn around and rocket up from here. So if we have some more downside there, there's a pretty good chance that we are going to finish September below that trend line there. So if that's a false break and then we turn down in October, it would also be a contracting upswing on the monthly chart, and we could well be due for a decent run down, as I've been watching for and waiting for on the Australian dollar. Also, if you move across to the weekly chart over here, we're really at a big point of no return. We've retraced 75% of the range from our September high last year down to our big April low this year. And really, once this market, once the Australian dollar, you can test this for yourself, once it retraces much past the 75% milestone, it usually goes on and it breaks through the high there. So if it does that, I'll be looking at a price target initially of around 72.5 cents with more to come later. But just for the time being, we're sitting on that 75% milestone. Yes, we've got expanding weekly ranges to the upside. I think that we're more likely to have a pullback into a higher bottom and then keep going to the upside. The key will be this 50% milestone here. If we can stay above that 50%, even if we come down and make a triple bottom on there, you know, this trend line down here from that top, we've broken above there. Often a market will break through a trend line, then come and sit on that trend line. We could find ourselves there at some point in October. But for the time being, on the Australian dollar, as I said, we've got an overbalance here on the daily chart. The rundown that we've seen from our top on Wednesday was 121 points. That occurred at 4:30 in the morning when the Fed announced that they were lowering interest rates, which is an interesting signal because usually if US interest rates go down, that would be a positive sign for the Australian dollar. You'd expect the Australian dollar to go up, all else being equal. Clearly, all else is not equal because the Aussie did rocket down. When I say rocket down, 120 points is not that big of a deal, but it is a strong move there. And if you look at the last downswings or the previous downswings in this run-up since our August lows, we had 40 points down last time, so we've run 3 times that last downswing there. Or if you're looking at the slightly bigger swings, 77 points down here, we've run just over 1.5 times that swing there. Ideally, to call this an overbalance in price, I'd want to see it run double this larger swing here. I actually think we might see a bit of a run up Monday, Tuesday in this market, but I do think based on this larger range here, it's more likely to be into a lower top and we'll have another crack at the downside. Let's move on now to the British pound US dollar. This one's a little bit clearer. You can see on the monthly chart on this bigger swing, we repeated this previous large range. We've gone a little bit through there and now the market has run down, not much of a pullback, and then it's run up and gotten very, very close to the old top there. That's on the monthly chart. And I do have a price target up around 149 for further down the track. This is a monthly chart. I think we're going to pull back on this monthly chart now and have a run down probably to around that 127 level, which I'll talk about in a moment as we do our deep dive into the pound. But I do think it will then continue up, and that 149 target is where I think it will be heading up to. Looking at the weekly chart over here, we had our top come in, we've had a pullback, and then we had a run up on the weekly chart, a higher bottom, and we've started going up. That's all well and good, but we've now had an outside reversal week last week. We opened, we ran up into that Fed announcement high on Wednesday night or Thursday morning in Australia, and we've closed below the low of the previous week and right on the low of the bar there. So an outside reversal week, a contracting run up. To me, that suggests that we've seen the end of this monthly upswing. See this weekly range here? That just represents this monthly upswing here. And from that point, from the top there, we've actually run down with 2 quite heavy sell-off bars here, and we've broken this key swing low here. So a clear overbalance on the pound, much more clear than on the Australian dollar. So I do think in the short term, this one's looking to head down. Sadly, it didn't reach that 137.86 level that I was watching. I did check that on the pound, and obviously I was looking on the Australian dollar as well, but it just didn't get to my level. I didn't get a short away on this trade. Now, before we move on to the euro, which did actually hit its price target, and it hit it quite neatly too, but before we move on here, I just want to talk about my next price forecast for the pound. If you've hung around, if you're watching the video, here's something that's pretty valuable and that's worth incorporating into your trading if you haven't done so already. I think that the pound is going to run down. I can see a lot of support around this 62.5% milestone, around the 127 level. So here we go. Here's a weekly chart here, running up from our January low, running up to our high up here, and looking at the pullback there, I've run a ranges resistance card over that. Those are explained in Gann's book, How to Make Profits in Commodities. Or if you're a safety in the market student, just check out the #1 trading plan there, which is part of the Active Trader program. But looking at this, as I said, we've got that weak run up there, outside reversal bar there. Look, maybe it's a false signal and we turn around and we run up this week. You've got to be prepared for all possibilities there. But the strength of the rundown on the daily chart, I do think there's more downside in this market. And if this thing goes much further down, I think it will break that low and keep on going. Now, why do I think 62.5%? Well, if you look at this move here, think of this as a large picture move. This is a weekly chart. It's a run about 6 months up. So that's a decent sized move. That move had a starting point. In other words, it had smaller moves occurring earlier on. And if you have a look down here, you've got a run up from a low up to a high there, and then a deep retracement there. That retracement, if we go back to a daily chart there, you can see there's a decent run up. Obviously, there's a little daily downswing here. Not much going on there. So if I ignore that and I look at a bit of a cleaner move up there, that's your first decent pullback after your daily run up there. In fact, that is actually the weekly, what we call the first range out. And if you have a look at that, the market ran up there. And what did it do? It retraced 62.5%. Okay, and then it obviously ran up from there and continued running up. Now, that alone is not enough evidence, but if I drop down to a smaller range now, remember they're all coming from that January low. If I drop down, and this is why we're saying a deep dive, you're studying the move. And if you're a pound trader, you would have been watching this and watching your charts unfold from this January low. But if we drop down and have a look at this small move here, you can see the market actually ran up. This is on the daily chart now. There's your daily first move up. And what did it do? It pulled back just a little bit through the 62.5% milestone there. So that one's gone a little bit through 62.5%. And you can see that here. These horizontal lines, that's the ranges resistance card. That's the daily first range out there. The market pulled back, not quite to 75%, pulled a little bit through the 62.5% milestone, but look where it pulled up. Now, these lines here, they are discussed in the form reading video that I spoke about. As I said, I put a lot of stuff in there, and I do recommend that you check that out at some point. If we look at this larger range here, and by the way, when a market makes a big low and then it's having a good run up over several weeks and months, as that move runs up, it doesn't matter, when it gets to here, I put a ranges resistance card on here from the start of the move to the current end of the move, not the end of the move, because we don't know exactly at this point where the end will be, but as the move goes higher and higher, I move that ranges card up to there. So I put it up here at this point. Obviously, the market then had a pullback, and then it ran up to here. So you move your ranges card up to here. You can also, there you can see the market running down to 62.5% there, making nice triple bottoms there, nice bit of form reading there, slightly higher fourth bottom, bang, off you go to the upside. But you can also see again, those lines coming into play again very closely there on that larger move as well. So markets are not as random as people think. People say, oh, markets must be random, otherwise you Gann traders would get it right all the time. Well, Gann didn't get it right all of the time either. Now, some will say the only times he was wrong were when he was making deliberate errors. I don't buy that argument. From what I've seen of Gann's work, if you want to set up one market, you are looking, even with the benefit of computer charting, you're looking at a large time commitment. And Gann was commenting on everything back in the day without computers. He was talking about stocks. He was talking about the different commodities, the indices. He had a lot of markets running. So he wouldn't be doing his full scope of analysis on every single market, picking up every inversion, picking up every price point, etc. So to me, I can accept that he was wrong at times there. But take some time to play with these tools here. And as I said, check them out in that form reading video, and you'll start to see markets are not as random as you think, and it kind of does blow a hole in the random walk theory. Now, finally, for the pound, what I'll say is this. We've got a target of 127. I think the market will pull up around the 134 level, have a bit of a pullback. That may give us a lower top to set up on. Now, if you want to watch that on the pound, I'd strongly encourage you to set up your charts similar to this in Gann's book, The Wall Street Stock Selector. This is called Wheels Within Wheels. That's part of that Gann's Gold series. That was the second video in that series, which is important to study before form reading, because Wheels Within Wheels will help you to understand form reading, because you're not just applying form reading to one time frame, you're applying it to all of your time frames. So you'll need to check that out at some point as well. 48 minutes for form reading, 20 minutes for Wheels Within Wheels. That's 68 minutes. Run the video at 1.5 speed, and it's only 45 minutes, so it won't take you long to get through there, but there's plenty of good stuff in there. This is what it will look like roughly if you set your charts up that way on the pound. Here's the weekly chart over here. So we're targeting this 127 level, the 62.5% retracement. So far, we've got a confirmed weekly swing top in here. And as that has run down here, we drop down to the daily chart over here, and you can see that's all one daily downswing. It's an expanding daily downswing as well. So a massive range down here compared to this range over here. To me, I think there'll be more downside at some point. It will have a little bit of a pullback. If we look at the 4-hour chart over here, you've got a rundown, pullback, big run down there, weak pullback, and then a small run down there. So at some point, the 4-hour chart will signal a turn. We'll see that on the daily chart. We'll see a daily swing chart pull up, as I'm expecting on the Australian dollar as well. Once you get that, you can start tracking these swings and sections as the market goes down, and you can try to lock on to that 62.5% retracement level there. So we will keep an eye on this one in the upcoming weeks. But let's say, for example, we pull up at 134, then we run up to about 136, for example, as a potential pullback there. From 136 to 127, you're looking at 500 to 600 points of potential profit there. So not a bad run if you can get a good tight entry if and when a top like that does come in. And then that can give you a nice run down. And supposing the market does stop here and put in a nice clear low, now you're cashed up and you can either take all of that profit out and start again, or you can start trading with a slightly larger amount, as Gann spoke about in some of his lessons like Chrysler Motors and the US Steel lesson. So if you do want to follow the pound, I'd really encourage you to set up one of these wheels within wheels charts. Spend some time studying wheels within wheels. If you're a safety in the market student, that's the whole active trader program online training there. So just make sure you revise that and you're all good to go. But have this set up, run your key milestones on the charts, and just watch the market unfold. Even if you don't want to trade the pound, this looks like the clearest and cleanest example across the 4 currencies that I've been tracking, so you might like to keep an eye on it just for a learning experience. All right, moving on to the Euro US dollar now. This was a funny one because it did hit that price target on the monthly chart and it hit it on the daily chart. I didn't take that top for 3 reasons. The first reason being, I thought it would go a fraction higher because on these other charts here, which I've taken off now, there were these 2 milestones, 119.12, and I've been talking about those for a fair while. That's a target that I've identified a long time ago, and that was fairly clear. I'm not surprised that was hit, but there were a couple of slightly higher levels up around 119.30 that I thought the euro would probably hit, and it hasn't done that. So that's the first reason. It didn't quite get where I wanted to. The second reason that I didn't take this short trade is that the euro, I haven't put enough work into this year. I only really look at it once a week when I'm preparing for the Forex Form guide. And the third and final reason that I didn't take that trade is that all unfolded at 4:30 in the morning and I was asleep. As a trader, you realize there are some trades that happen overnight. If you're really, really certain of them and you want to trade them, you can always set your alarm. But with 2 young kids, every minute of sleep is valuable these days, so I tend not to set too many alarms. I have 2 alarm clocks in the house and they go off at various times. See that run up and then a pullback into a weekly higher bottom, failed run up there, false break of that top, whereas the pound didn't get above its old top there, so maybe the pound is a little bit weaker there. And then on the daily chart, strong run down there, larger than the last run down there. So again, track it and see on the 4-hour chart, look for signals that the daily swing is over, then just see what happens. Sometimes you can get a higher bottom here and you're wrong and the market will shoot up. Maybe it will touch that 119.30 or 119.40 level after all, or maybe it will just keep going. You can be wrong, but you'll generally see on the smaller time frame. So when you start running up there, you combine this daily chart with something like your 4-hour chart, maybe your 1-hour chart, and you can see the patterns there with the form reading and you get a good idea. Are we looking at a pullback into a lower top, or are we looking at a big strong run up there? So like the pound, again, you might like to set this one up either 3 or 4 charts and just keep an eye on that over the coming weeks or so, but it does look like it is due for a bit of a pullback there. Finally, I just want to take a look at the US dollar Japanese yen. Interesting this week, and that's again coming on that Wednesday night, Thursday morning announcement in the US. We've put in a higher bottom on the 50% milestone of our run up from the April low, which is this one in here, up to our current high at the end of July, and then a pullback there. When I see a market make a 50% retracement, and keep in mind this one has just fallen short of the 50% retracement by a few ticks there. It's not quite touching the line, but to me that's as good as the 50% retracement there. When I see that, it's quite common for a market to run at least 100%. So it's made a range here. Take that range and project it forward from this 50% milestone. It will often do that or more. So that'll be an interesting one to watch. I've got to say, if it does that, then maybe the Aussie, the euro, and the pound do have a bit further to go down, but I do like that 127 level on the pound. But looking at the US dollar yen, if we take over here the daily chart, and we project that range forward, as I said, 100% takes you to around the 156 level. That's over here. So if we put in this higher monthly bottom here, and then we repeated that range up into that 156 level, it could just be a slight false break of that trend line. And if the market then closes below there, that could be your area to go short from. As I've said a few times, you've got triple bottoms down here. I think that they're more likely to be broken than not, but we'll see what happens with that. And as always, we'll have a look each week in the Forex Form Guide and just watch this market unfold. That's all for this video. If you found value in it, I'd really appreciate it. As I said, if you can click on the like button, you might also like to click on other people's replies as well. It does just, as I said, give the YouTube algorithm a nudge and say, hey, this is important. And at the end of the day, I'm extremely grateful that I've been exposed to WD Gann's works and that I have his techniques and teachings under my belt as a trader, because I don't use anything else, because I haven't found anything else that works as well, if at all. So as I said, if you could take a moment just to click on the like button and like a few other comments if you agree with them. You might like to leave a comment of your own or a question, or just say hi, and subscribe to the channel if you haven't already done so. That's all for this week's episode of the Forex Form Guide. I'll be back next Sunday night, 7 p.m. Sydney time. So until then, I wish you all the best with your trading. Have a fantastic week, and bye for now.